Hey guys, and welcome to the Working Money channel. Robart posted this. Okay, the market can possibly crash further, but it has also crashed enough to start accumulating. Yeah, I don't disagree. It's just a game of patience from now on. Guys, let's take a look at the market right now. Bitcoin did, in fact, move lower. I mean, a little bit lower than where we saw it yesterday. Yesterday, I was talking about this trend on the micro time frame. Now, this is Bitcoin on the hourly. So, I mean, unless you're day trading, this kind of thing really doesn't matter. And I know a lot of you guys are holding for the long term, whether it's Bitcoin or XRP or any other cryptocurrency. Nevertheless, we are forming a new level of support down here for Bitcoin on the micro time frame. I mean, when we zoom out, though, the trend is still moving in a fairly positive direction. We haven't seen too much downward pressure here on the daily chart. We did see a couple of down days. This candlestick here from today, we zoom in on that a little bit here. You guys can see it's looking like it could form, or rather could be forming, a reversal pattern. So that signal that the trend is going to reverse and continue moving to the upside. We did see that back here last week. We saw another push up for Bitcoin up to $23,000. And then we're just kind of hanging out here for the last few days. But market's looking very good. Let me just bring up XRP. XRP right now trading just above 40.5 cents, so at about 0.406. And taking a look at the XRP chart here on the daily, we are trudging upwards as well. So, you know, a lot of positive momentum with very tall volume bars followed by negative selling pressure, but very low volume in terms of selling pressure. And again, that reversal candlestick pattern, which would likely denote that the XRP trend is also going to continue moving upwards. Market cap still above $1 trillion. So that's a good sign. We were seeing it, in the depths of the bear markets around 700 billion. Bitcoin dominance still fairly strong at 42.6%. In the last 24 hours, most coins have lost momentum, and some more than others, obviously. Ethereum down 4.84. We got XRP down 3.80. Cardano is down 5.84. Dogecoin down 5.63. Solana down 5.12. So, a lot of coins in the last 24 hours are down. However, take a look at the long term. Okay, the 7-day Bitcoin is up 6.57%, and XRP up also within the last 7 days, 4.33%. So, overall, the trends are looking very strong. Not only that, I think we may have seen an adjustment in Peter Schiff's opinion on Bitcoin and perhaps cryptocurrencies as a whole. Peter Schiff comments on his bad Bitcoin advice and speaks again about the $100,000 price tag for Bitcoin. So this is what Peter Schiff is now saying. Okay, renowned economist and equally well-known cryptocurrency critic Peter Schiff has commented on his poor predictions for Bitcoin. Now we know Peter Schiff is a gold bug. He, is a proponent of gold, buying precious metals. He stated that what could be worse then giving advice to sell Bitcoin ahead of its 30% rally would only be to participate in that very rally and then crash to levels even lower. Schiff commented, his comments rather refer to the events in recent weeks when after his extremely bearish forecasts and call to sell Bitcoin, it rose 37.2% in value. So, the literal exact opposite of what he should have been doing. I probably won't tell them anything at Bitcoin. 100,000, it's unlikely Bitcoin will ever trade that high. Now, notice the word he used here, unlikely. Whoops, let me just close that. Unlikely versus impossible. And they pointed it out here in this article. So, they're framing it like he's softening his stance, whereas previously the economist argued that it was impossible that Bitcoin would reach $100,000. His opinion on the matter has now softened, as they like to put it, and he is saying it is unlikely. So not counting it out completely, I'm sure he has learned his lesson. Let me just bring up Bitcoin again on the daily. So, we're seeing pep in Bitcoin step. And I mean, even if we do pull off a full Fibonacci in this next bull run, and I mean, this could take another year or so before we get back up to these all-time highs, Bitcoin is looking to hit $243,000 per coin. So that would be a target for 2024, perhaps 2025. $243,000 per coin. And I mean, this is not unheard of. We've seen this in the past. Obviously, we did see this Bitcoin bull run from 2018, top of the bull market all the way down to the bear market. And what did we see for Bitcoin at that point? Well, it basically did hit. It almost got right up there to the top. This was actually let me just bring it over just to show you guys, this was actually the top of the market right in here. So somewhere between the 3.618 and the 4.236, almost at the top. And so, if we were to even just say that it were to get to the 3.618, we would see a Bitcoin price of about $210,000 per BTC, which is still very, very close at this point. We're splitting hairs. So, you know, when he's saying it's unlikely it'll hit 100,000, where does 100,000 actually bring us? $100,000 per BTC would bring us right here. So pretty much at the 1.618. I think that's doable. I think we're going to see many cryptocurrencies soar in this next bull cycle. I mean, the EU has also voted that banks can hold 2% of capital in Bitcoin and other cryptocurrencies. So, you know, we got to think about this in terms of the regulatory clarity that we're going to see, not just this year, but moving into 2024 and 2025. The European Union continues to push hard for clear regulations for Bitcoin in the crypto industry after the final vote of the European Union's draft legislation to regulate cryptocurrencies. The Markets in Crypto Asset Regulation, or MiCA, was postponed until April 2023. Due to technical difficulties, the European Parliament yesterday approved new banking regulations. The Economic Affairs Committee of the European Parliament on Tuesday approved a bill to implement the final stage of the post-financial crisis global bank capital rules, or Basel III, starting in January of 2025. It stipulates that volatile cryptocurrencies like Bitcoin will be considered the riskiest investment. In doing so, the European Union is following the Bank of International Settlements, which essentially divides crypto into two distinct groups. Group 1 represents tokenized assets and stablecoins with approved stabilization mechanisms, while it is questionable whether Tether or USDC meets these requirements. And Group 2, guys, includes stablecoins without BIS approval, stabilization mechanisms, and volatile cryptocurrencies, so the more risky currencies. This group classification entails that Bitcoin, Ethereum, and other cryptos require banks to apply a risk weight of 1.250%. Is that the European way of putting a decimal, or is it 1,250%? That obviously does make a big difference. So MiCA rules coming into play, and that's going to be, we're going to see more clarity on that this coming spring. However, they are voting that banks they are allowed to hold up to 2% of Bitcoin and crypto in general. So I guess these would be Group 2 category cryptocurrencies. So that is what we are seeing in Europe. I also happen to see this from Crypto Eddie on Twitter. Bringing up an interesting point here, there was a story that just came out with regards to Coinstar. Now, these are kiosks where people can trade in their coins for fiat dollars. They charge a little service fee, and so they have these kiosks set up in supermarkets and other areas. Well, here's what's happening. The Apollo Global Management-backed company known for kiosks to swap coins for cash, and a group of its creditors have tapped advisors to explore options ahead of fast-approaching amortization payments, according to people with knowledge on the matter. So these guys, Coinstar, they're facing amortization payments on about $900 million of asset-backed securities in April, according to data compiled by Bloomberg. The company may need to seek some kind of relief from creditors related to the payments, according to the people associated with this matter. Now, why this is interesting, back in 2019, Ripple invested $1.5 million in CoinMe. And if you guys remember at that time, that was a big deal. CoinMe was the first Ripple liquidity hub client, okay, in 2021. And then last year in 2022, MoneyGram took a 4% stake in CoinMe. CoinMe is part of Coinstar, and now we're seeing in 2023, Coinstar is seeking help with payments due to 900 million asset-backed securities, and that is what I just read for you in that article. So if you want to read the full thing, it is here. The bigger point, though, that I think Crypto Eddie wanted to point out is this whole thing that Ripple invested in these guys back in 2019, and these guys deal with hard fiat currency, coins to cash. Think about this, and forget the story for a second, but just think about this. Ripple, DLT blockchain cryptocurrency, investing in this company that deals in hard cash. Could it be that Coinstar or CoinMe is looking to pivot or had been looking to pivot, create some kind of new product that would be using DLT technology, Ripple? So, I mean, yes, they are in a bit of a bind right now. However, who knows? $1.5 million as an investment from Ripple is not a huge investment, but they do have a stake in this company. So are they going to get bailed out? Will they still be able to pivot onto the blockchain? And again, this is just wild speculation, but an interesting story nonetheless. Wanted to thank Crypto Eddie for posting that. Wanted to keep moving because more news here, guys, coming from RippleX, okay, the investment arm of Ripple Labs. DJ Peter Vass posted this. So RippleX reveals selected parties for their $2.6 million XRPL grant. They're looking to pour more money into new companies by supporting innovative technologies. The team is helping to create a positive environmental change while providing meaningful and lasting solutions. So this is focused on sustainability. And it's the wave 4 of the grants, so that's a total of $2.6 million to fund 25 projects that focus on inclusion, sustainability, equity, and diversity, as well as general technical initiatives. Through the wave of grants, the XRPL is working to make a meaningful contribution towards a more sustainable, equitable, and inclusive future. They talk a little bit more about this, where they're headed, where their focuses are, taking advantage of environmental initiatives, looking to support zero carbon initiatives. So, this whole big environmental push, which we know is also one of the major talking points at the World Economic Forum, to which Ripple is a partner. We also had a message from Cindy Young here. So Cindy Young, Ripple's managing director for Europe, foresees that customers and decision makers will stay vigilant regarding the eventual ecological sustainability of cryptocurrencies and blockchain technology. She's also confident that a greater level of sustainability can be accomplished by utilizing more energy efficient blockchains and blockchain-enabled solutions like tokenization of carbon credits. So again, the XRPL is set up for this. I'm also not surprised that they have an investment arm that is, promoting more development on the XRPL for these types of initiatives, considering, this is the way the powers that be want to move forward. Do I agree with it completely? No. And my reasons are not really crypto related. In terms of being an XRP investor, I am happy to see this. More development on the XRPL for things that or applications that are going to be utilized in the future moving forward. This is where the future is going to be. So, more money being poured into this. Wanted to thank DJ Peter Vass for posting that. Also, interesting news here from Mr. Hubert on Twitter. Again, the SEC is at odds with itself. So, inner turmoil at the SEC. These constant statements to contradict themselves are laughable and cause constant confusion. Imagine the Attorney General's office would consistently publish statements that parts of the Attorney General's office don't approve their actions. Now, this was a statement that was just put out yesterday here, January the 24th. The Commission's settled enforcement action finds that Bloomberg Finance violated the Securities Act, which prohibits the use of materially false statements to obtain money or property in the offer of the sale of securities. And then check this part out, guys. Because we do not believe that this particular statement at issue were made in the offer of the sales of securities, we do not support bringing this action. Now, this doesn't have to do with cryptocurrencies, but this was a statement that was put out by Commissioner Hester Peirce and Commissioner Mark Ueda. Okay, two commissioners on the committee that have, publicly gone out against Gary Gensler, their boss, for other things crypto-related, and we're seeing that here too. They're contradictory on other matters. I mean, it doesn't help when the SEC's approach to cryptocurrency regulation is literally ridiculous. This from Michael Branch here. SEC commissioner says regulators' current approach will take, get this guys, 400 years to go through cryptos it alleges are securities. Because it is so tedious and because there's no real organization or no real sweeping guidelines, Hester Peirce is saying the regulator's approach will take 400 years to go through all cryptocurrencies it alleges are securities. This SEC commissioner, or Hester Peirce, has given her opinion on why the regulator has so far failed to develop clear rules for the crypto space. Peirce, fondly called Crypto Mom, made this known while giving a speech back on January the 20th, so a few days ago now. Peirce compared the SEC's current regulatory approach to the unromantic version of CompuDate from the 60s comedy series That Girl. I don't know that series. According to her, the SEC invited industry participants only to slap them with lawsuits, asserting that the current approach of regulation by enforcement will take 400 years. No, I'm not making this up. The SEC's approach to regulating crypto, this is a quote by the way, looks somewhat like a decidedly unromantic version of CompuDate from the old TV show. We tell people to come down to the office to talk to us about their projects, plug the information they give us into our proprietary security identifying algorithm, and then send the people home with a court date. Peirce said, if we continued with our regulation by enforcement approach at our current pace, we would approach 400 years before we got through the tokens that are allegedly securities. So there you have it. Peirce, stating it, and she's not afraid to really, go against the grain, go against what Gary Gensler is suggesting is beneficial for crypto. And notice how he slips in crypto security tokens in this latest SEC video. The Cryptic Poet picked up on this. Check out Gary Gensler casually trying to sneak crypto security tokens right past us like it's all good. Listen to this.
Best ex might sound like you're best friends with your ex. It's actually a central obligation for brokers, simply to seek best execution when you, their customers, are trading securities, like equities, fixed income, options, or even crypto security tokens.
Normalizing it basically, almost stating that this is fact already. Crypto security tokens, they are now going to be registered with the SEC, similar to equities, fixed income, and options. So, he slides it right in there, as per the cryptic poet. A sneaky find there. Wanted to thank him for posting that. But the world is changing, guys. Bankers are saying it. Central bankers are mentioning it as well. And here's Prasad, a professor, a Tolani Senior Professor of International Trade Policy at Cornell University. And here's what he had to say about banks, trust, this new financial system, and DLT technology specifically.
But I worry also about potentially downplaying certain aspects of what we are seeing in the world out there. I think the trust is a really crucial issue. But one interesting question is whether verification can really take the place of trust. As Governor Ingves and Governor Patel correctly pointed out, it's very hard for banks which don't trust each other to have a mechanism that goes outside the central bank. But if you do have, as with the distributed ledger technology, a way of providing verification in a much more obvious way, one can think about central banks, maybe thieves working together, essentially getting together and creating a verification system where they can cross-verify each other. I don't think we're quite there yet. I don't know if there will be still an element of trust that is missing even among these financial institutions, which are, after all, competitors. But I don't see it as implausible that verification could start, at least to some extent, taking the place of trust. I don't think it will take the place of trust enough to displace fiat currencies. I don't think it will displace something like the dollar as a reserve currency, as a store of value. And given the amount of volatility we see in things like Bitcoin right now, which paradoxically are being used as stores of value, apparently, rather than mediums of exchange, I can still see them beginning to play important roles as mediums of exchange as the technology matures and stabilizes.
That's interesting. Governor Patel, you're nodding. Do you agree with this?
I do broadly agree with what Ishwar is saying. I think that there will be elements of this which either will come into play or are already in play. Yeah. I mean, the whole issue of financial inclusion, using the e-payments, etc., that's already happening. So that is in a way more fintech rather than cryptocurrency or a crypto asset. And I would agree with Ishwar on that completely, that is here to stay. And in fact, I think on balance, that is far more positive than negative.
Well, and
So I noticed that too when Prasad was talking about technology, DLT technology. He was conflating cryptocurrencies like Bitcoin and removing fiat currencies, abolishing fiat currencies with new digitalized technology. So DLT technology, as we know, is not going to erase the need for fiat currencies, but complement them. And this second guy here, later on, he kind of clarifies that. Notice who else is on the panel here, guys. Augustin Karstens from the BIS, the Bank for International Settlements, and who has deep ties to central banks around the world. And the BIS, of course, Ripple. DLT technology is going to be implemented worldwide, and these guys are just getting us primed for this eventuality. That is just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.